So if you think of a big order, it's like one thing you're looking at. Our triangles is an imbalance of many orders that create more sellers than buyers. It's pink. More buyers than sellers. It's blue. Within like plus or minus three ticks from the last traded price. So it's the serious traders or orders in the book. Whether it's automated, algo, HFT, doesn't matter. It's people who want to buy it versus people who want to sell it. That's what we're really predicting, future buyers and future sellers. So when you get buyers to start stepping up, remember, it's not just a buyer, it's a cluster. So I think the word is like a herd. When there's a herd of buyers and they overwhelm a herd of sellers, then you're going to get a blue triangle. Now, when that herd starts to maybe move together and move up, that should indicate they're getting what? More aggressive. So look at this imbalance as like a single unit almost. And are they getting more aggressive? Which for blues would be up. And you see it in here up, up. You see how the next imbalance is higher. The next imbalance is higher. It's breaching the sell imbalances to indicate that we might have a bottom. Now, here's another thing, the breach of the blue. We always say be careful below like this spot. They were walking it up, they were aggressive. And then as soon as they get below it, they could do this. Happens a lot. Now you see it walking up again. So if that blue gets breached, look out below. It doesn't. They're walking up again. They get above the PWAPs, which is transitional. They're walking up again. They breach a pink, which is bullish. First blue, they breach. If you're long, you want to get out, and it would be in there. And even though it doesn't go down forever, it does break quite a bit from right in here to at least here. That's the first blue breach of the rally. If you want to be objective, to cover a long position. When you could see these blues coming in, this gets breached and we go down a little bit. You breach the pink right here. And the next move was up because there's no longer a sell imbalance or the buyers are overtaking it and they're not coming in to defend it. But over here, you have to anticipate, holy shit, you can't even stay up and rally and you get a breach. So it is bearish. Now it goes sideways for a while, but it's like, all right, it's almost like rejection in a way. And so if I rewind it again, when you if you're watching anything that is indicating more buyers than sellers, whatever it is you use, are they getting more aggressive? So for blue triangles, it would be up. For pink, it would be down. And then I think it's important to know, like when they're getting aggressive, as soon as they breach it, that's a temporary top. Think about it as like one order. Let's say it's a 500 limit order. No, we don't see this a lot, but if you get a 500 lot bid, comes in and tries to buy it at 3, and I'll just use fictitious prices. He doesn't get filled. Now he's bidding 5. Now he's bidding 7. Now price is actually running away from him. He's bidding 9. He's bidding 11. He's bidding 12. They fill him and it goes back to 3. That's what you're trying to see and follow, and that's how price works a lot. It runs away enough from a lot of buyers. And then once it's able to satisfy that buying, boom, it goes down. Now, it might not go down all the way where it started, but that's how price reacts to buying and selling.